TD Ameritrade's Investor Movement Index remained flat at 4.17 as 2022 came to a close, with clients ending the year as net sellers of equities overall. However, despite the sells, investors still found some individual names worthy of a buy. Here to break it all down is Shawn Cruz, TD Ameritrade Head Trading Strategist. Good to see you, Shawn. So, obviously, we did see a broader sell-off in equities in that 5-week period of the IMX index in December, but some opportunities there. What are clients buying?
So we actually saw clients come in and actually look at some of the names that have really been getting beaten up throughout the entire year of 2022. But we saw electric vehicle makers like Tesla, Rivian get some interest. We also saw some of the more popular tech names that have really been getting hit pretty hard, like Amazon, Apple, and also some of the semiconductors. But I do think it's interesting that they weren't buying semiconductors across the board. They were buying some names like Intel, but they were continuing to sell NVIDIA for the second month in a row, which I thought was interesting. So semiconductors, it looks like, is becoming a little bit more of a stock picker's market within that sector.
And it could be the same said for tech as well, because obviously we're seeing Meta, one of the tickers that we're seeing a lot of clients selling in this space as well. What are some of the ones that they're trying to veer away from, what they're selling off at the moment?
So, I'm sorry, it got a little noisy in the background just now. Did you ask what they were selling?
Yes. What are the clients selling in that December period?
So one thing I think NVIDIA was being sold for the second month in a row, and I do think that's noteworthy. One, they had a pretty good earnings report in November come out, and clients actually used the strength off of that report as an opportunity to unload some of those shares. But then you got a little bit of a second draft of negative sentiment come out in this semiconductor space in December. They used that weakness to buy some names, but they still went out there and they were selling a name like NVIDIA. So I do think looking at some of the selling pressure we've seen there, also a little bit of selling in some of the energy names as well. I think crude oil has been a little bit more in focus. It's been a lot more volatile with just a lot of the sentiment around the growth outlook and how that drives demand, changing the price of crude. So I do expect that actually to be a little bit more of a volatile month-to-month industry when you look at energy names as far as what is being bought and sold. Energy having a pretty good day today. That's helping some of the oil services names out there in particular. But I do think energy is going to be an interesting sector to watch here as we get into the new year.
And Shawn, as we dig into the demographics, what you've seen with millennial clients, even though they reduced their exposure in December as well, you saw them as being net buyers of equities. Why is that?
I mean, one is they have a little bit more of a long run horizon. They also tend to sort of lean towards some of the more, I would say, growth-oriented technology names. So when you do see a little bit of a divergence there between the overall population wanting to be sellers, but the millennial base still being net buyers overall, I think it just shows that when you do see some of the weakness that we have seen out of these technology names, because they have a little bit more of a longer run outlook, they might be one of the first client bases that are willing to step in and use some of these pullbacks as buying opportunities.
And are we seeing retail investors acting the same way as institutional investors right now? Because obviously a lot of volatility, a lot of uncertainty coming into 2023.
Yeah, I do think there's a little bit of overlap, and a lot of the issues that you saw a lot of institutional investors mentioning were also front of mind for retail investors as well, and that is Fed aggressively hiking interest rates, sort of putting their foot on the brake here, but that's also going to have some implications for overall economic growth expectations coming up, what that can mean for corporate earnings, which we're going to start getting a pretty good look at this week when we hear from the big banks, but then also the outlook for inflation, and if we do start to see inflation coming in, what that could mean for monetary policy. So I think a lot of the issues that institutional investors are looking at are what retailer investors are focused on, and you're going to come to the same conclusion. If you are concerned about those items, you're probably going to want to deleverage. You're going to want to get a little bit more defensive in what you're holding. You're not going to go out as far on the risk curve and stick your neck out in some of those companies that aren't profitable or have a lot of volatility in their revenue and their earnings. You're going to steer clear of those if that is the environment that you see yourself investing in. So to that extent, we did see institutional retail, I think, behave in a similar manner over the year.
And it's hard not to get excited when you see these rallies. Obviously, we see that continuing from Friday. But do you think that clients are pricing in enough risk at the moment for the year?
One thing is that whenever we've gotten these rallies where you get some sort of data point that indicates that maybe inflation is going to start to soften up or is not going to be as bad as we had seen it over the previous months, you get a rally on that. And I always say be a little bit careful when you're rallying off of hopes that this means the Fed's going to be able to pause or dial back how aggressively they're hiking rates. Because one thing that has been consistent, every time we get some sort of a economic data point that points to softening inflation, the market starts to say, could this be what allows the Fed to maybe dial things back? That usually, shortly after that, we get another data point that maybe points to inflation remaining somewhat firm, and you see those rallies get reversed just as quickly as they happen. So you don't want to throw water on this entirely, but we just got one data point on Friday that's a little encouraging with softer than expected wage growth and the employment report. But this week we get a lot of inflation data out. You're going to want to focus on that, because if that does come in a little bit firmer than expected, then you'll probably see this rally reverse itself fairly quickly.
And obviously hope isn't an investment strategy. People need to keep that in mind and not sort of get caught up in a lot of the noise here. A lot of people also waiting to see what's going to happen if and when the Fed pauses in 2023. How do you think you'll see retail clients shift?
So if we do get a good sense that the Fed is going to pause, or they feel like they've hit a good level that they can then hold rates at, I think you'll see investors start to come in and take on a little bit more risk. And some of the trends that we saw throughout 2022 could begin to reverse themselves. I don't know that we're going to go all the way out and get into some of those riskier, more frothy valuation type companies, but I do think you'll just start to see a general flow back into equities out of some of those safer areas of the financial asset spectrum. That'll be the first thing to happen, but I do think markets right now want to get a good sense for where the Fed can finally be in a position to pause. That'll be the first shoe to drop. Then they may start looking at maybe a potential rate cut, but you need to see significant progress on inflation back below that, at the very least 5% level, which I think we are still pretty far out from. So right now, the first thing you should keep an eye on is if the Fed will be in a position to finally stop hiking rates here in 2023.
Something I know the markets will be bracing for. A big thank you there to Shawn Cruz, TD Ameritrade Head Trading Strategist. Thank you for joining me this morning.